But the fact that so many silver stocks are basically in bear markets when silver is trading at the second highest price that it's ever traded, it just shows you how quickly the sentiment soured just on a sell-off. And remember, silver got down to about $46 in change at the low. And as I said, 50 is no longer the resistance. I mentioned that on the podcast I did on Friday when I just got back from the New Orleans conference, and I mentioned that there wasn't a lot of exuberism there. But it was tempered, and there was a lot of people that were worried about a bigger correction, a lot of people talking about taking profits. And what I was saying was the mistake that people are going to make in this bull market is taking profits too soon.
As confidence in the American dollar continues to decline, gold and silver are once again taking center stage and rising. The message is clear. This bull market is not slowing down, as gold continues to rise above the $5,100 barrier, while silver remains slightly below its all-time high. A global move toward actual, tangible repositories of value is being fueled by rising inflation pressures. The recent small decline was a normal break before the next surge, not an indication of weakness. One of the most vocal economists on fiscal irresponsibility and hard money principles, Peter Schiff, claims that the markets are still utterly mispricing future events. Even if metals are hitting all-time highs, mining stock sentiment is still far too negative, which presents significant opportunities for long-term investors. Schiff contends that this is only the start of a much bigger shift in gold and silver if inflation gets worse and the government keeps spending without finding a way to cut back. The gap between price and perception will eventually close since the fundamentals are stronger than ever. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing.
Today was another big day in the precious metals. And you know, that sharp correction is quickly becoming a distant memory at this point. Gold was up about $70 today, but it was up $100. Gold was only higher than it is right now on 5 days in history, right? This was before the correction. Silver, on the other hand, has had an even bigger comeback. It was up better than $2 an ounce today. We came less than $1 away from that today. In fact, based on where silver is right now, there was only one day in history where silver traded higher than it's trading right now. So for all the people that were talking about the end of the bull market, there's only been one day that we've had a higher price. Yet despite that, there are plenty of silver stocks that are still in bear market territory. I looked at a couple of big ones today that were down. I think you're down about 30% in Coeur d'Alene from the high, about 20% in Endeavor Silver, about 10% in Pan American Silver. The only silver stock that I noticed that made a new high, because it was up 8% today, was Hecla Mining. But the fact that so many silver stocks are basically in bear markets when silver is trading at the second highest price that it's ever traded, it just shows you how quickly the sentiment soured just on a sell-off. And remember, silver got down to about $46 in change at the low, and now we're back up to 53 plus. And as I said, 50 is no longer the resistance. I mentioned that on the podcast I did on Friday when I just got back from the New Orleans conference, and I mentioned that there wasn't a lot of exuberism there. But it was tempered, and there was a lot of people that were worried about a bigger correction, a lot of people talking about taking profits. And what I was saying was the mistake that people are going to make in this bull market is taking profits too soon. Now, sure, traders, you could have sold and bought back these gold stocks. They did have a big enough pullback. In fact, you could still buy back if you got out right at the top. But most people aren't going to get back in. They're going to get out and, they'll be waiting for a bigger correction. The corrections are generally very swift. Maybe they're shallow and they're over with. A lot of people who probably bailed out aren't back in yet. And the next thing they know, we're going to be at record highs. Now, certainly in the metals themselves. I mean, silver could easily hit a new record high this week. Gold, is a little bit further from its high. Gold still has a couple of $100 to go. So we need a bigger rally in gold than we do in silver. but they're both likely to make new highs. And I'm going to get into some of the fundamentals because there were a lot of very bullish news items that we were getting in the market. I mean, of course, one of them, I think, is the end of the government shutdown. I mean, I mentioned that on the last podcast that it looked like it was getting likely that the shutdown would end. And by Monday morning, it was pretty much a done deal. And that was really the catalyst for the $100 rise in the price of gold. $100 plus was the end of the government shutdown. Now, a lot of people might have thought intuitively, well, wouldn't that be bad for gold? I mean, wasn't gold going up because the government shutdown was bad for the economy? It was creating uncertainty, and that was benefiting gold. And so that once that uncertainty was behind us, once the government reopened and that was good for the economy, that would hurt gold. That's what a lot of people might have thought. But the opposite happened because the government reopening isn't bad for gold. It's the government staying open that's bad for gold. Because when the government is open, it's doing bad stuff. It's spending a lot of money. It's borrowing a lot of money. It's printing a lot of money. The problem with the shutdown was we didn't shut down enough government. Maybe if we shut down a lot more government, that might have been bad for gold. But the fact of the matter is it's business as usual in Washington, D.C., and that's good for gold because it means the reckless spending is going to continue, the money printing is going to continue, and so inflation is going to get worse, the dollar is ultimately going to crack, and all of this is bullish for gold and bullish for silver. The markets have not reacted. They're still shell-shocked from that correction, and they haven't realized, like I just said, silver was only higher than it is right now on one day, and it was barely higher. Yet you have all these stocks that are in bear markets because of that, right? So it's not going to be long. All those silver stocks, I think, are going to make new highs. Gold stocks, some of them have made new highs. Barrick Gold made a new high. Their earnings came out on Monday. Again, blowout earnings, record revenue, raised the dividend. The stock's up about maybe 13% in the last 3 days. And it's at a new high, so it took out its high. I noticed I Am Gold, another stock we have even in our value fund. That stock hit a new record high today, or I don't know if it's a record going back, but 52-week high. So some of these stocks have taken out their highs, but the vast majority of stocks are still significantly below where they were when gold and silver prices were not that much higher than they are right now. But it's just that fear entered the market, and it's just taking a little bit of time for that to, go away. People have a memory of that.
The market is about to enter a stage when it's easier than ever to distinguish between actual assets and speculation. Even when major indices like the Dow are reaching all-time highs, the underlying tone is changing. Crypto-related stocks are plummeting, tech stocks are slowing down, and the entire digital asset market is clearly tired. Even if Bitcoin's value is just over $100,000, in the meantime, continuing inflation, unchecked government spending, and a worsening fiscal outlook have kept gold and silver at their historical highs. As confidence in speculative markets declines, the recent decline in metals is already beginning to fade, and both seem poised to reach new all-time highs. A significant change in investor behavior is shown by the decline of cryptocurrency stocks, growing concerns about a recession, and rising demand for precious metals. Money usually returns to assets with actual, intrinsic value when speculative bubbles fall, and this transition has already started. The ramifications are quite positive for silver and gold. Show some love by hitting the like button, subscribing to the channel, and turning on notifications.
And this is also happening in general because, the Dow Jones hit another new record high today. We're getting closer, right, to a 50,000 Dow, which doesn't really mean much in the context of $4,000 gold, right? The media won't talk to you about that. But we're at, 48,250 or so in the Dow. So the Dow hit a new record high today. But the NASDAQ was flat to slightly lower on the day. So you're getting more of a rotation continuing out of growth, particularly technology stocks, which have had, they had problems last week and they're having more problems again this week. So you're seeing some money coming out of the tech sector. But before people started moving money out of tech, they were moving money out of crypto, right? The crypto industry has been decimated. Donald Trump, DJT, that stock hit a new 52-week low today. It's down over 70% from its January high. One of the reasons that it's doing so poorly is because it pivoted to become a Bitcoin treasury company earlier in the year. But look at, the Winklevoss, Gemini space station. That thing just came out not too long ago. It's down over 70%. I think the same thing for Circle. Circle is down. It's still up from the IPO because it went crazy. But if you bought it on the highs, I think I don't know if it was the first day or the first week, you're down 70% in that stock. But that stock bullish, also another crypto, down, I think 70%. I mean, these things are getting killed. MicroStrategy is down maybe about 55%. It almost hit a new 52-week low today, which might have been down about 60%, but it didn't quite hit it. Although I think it will probably do it tomorrow. Bitcoin itself is still hanging in there at just over 100,000, 102,000 and change. But Bitcoin is now down 35% priced in gold since its October high. This is November. So from last month's high to now, you've got a 35% drop. Now, in terms of the dollar, it's only down 19%, which is still a lot, but 35% priced in gold. This is a big deal that the entire crypto community is glossing over and acting like it's nothing, right? This is something. And I think people are ignoring this at their own financial peril. But I think what's a bigger indicator is what's happening to the whole crypto industry and all these crypto stocks, whether it's exchanges or the Bitcoin treasury fund stocks or the Ethereum treasury or whatever, anything that is now connected in any way to crypto is getting killed. And pretty much anybody who bought into crypto-related stocks this year is getting killed. And, it's ironic because Donald Trump, one of the things he said was that he wanted to make America the crypto capital of the world, or not the crypto, the number one in crypto. He wanted America to be leading the world in crypto and then be the Bitcoin capital of the world. That's what he said was his goal. In fact, in that interview he did for 60 Minutes, he said that was the only thing he cared about, right? Forget about everything else. All he really cares about was making America number one in crypto. Well, the problem is we already are number one. Trump doesn't have to make us number one. We are number one, right? More than half the people who own Bitcoin live in America, right? We're dominating crypto. We are the Bitcoin capital of the world. But soon we're going to be the laughing stock of the world. The last thing you want to be is number one in crypto because the crypto bubble is deflating. There's a lot more air that's going to come out of this thing. But the country that leads in crypto is the country that's got the most to lose when the bubble pops. So because we're the leader in crypto, we're going to be the leader in economic damage done from the bursting of this bubble. Right? There's going to be significant implications for the U.S. economy, which is also good for gold because all of the losses and the malinvestments that are going to be exposed are going to help gold. And of course, a lot of people that work in the crypto industry are going to be out of work. So unemployment's going to go up. A lot of things are going to happen negative. I don't know if it's as big or maybe it is bigger than the bursting of the dot-com bubble. But, if the AI bubble bursts and the crypto bubble, I mean, that's going to dwarf the dot-com bubble. But I do think that the crypto bubble is bigger than the dot-com bubble all by itself. And we did get into a recession when the dot-com bubble popped, although we also had the September 11th, terrorist attacks. But I think we're already in recession. So I think that, all the job losses and investment losses, and remember, people are going to react to this reverse wealth effect because I think if Bitcoin cracks this 100,000, I know it got below it last week, got to 99, but, they were able to circle the wagons and prop it up. But I think that if we crack and we really make a big drop in Bitcoin, I mean, even at like 50,000, which is still a really high price, for nothing.
Peter Schiff's warning is straightforward but impactful. The flaws in the cryptocurrency industry are not isolated. Rather, they are indicators of a far larger shift in the economy. He makes the point that although the Dow is reaching all-time highs, the true narrative is taking place underneath the surface. Even Bitcoin, which is still above $100,000, has lost more than a third of its value when measured in gold. Tech stocks are stagnating, and cryptocurrency-related businesses are failing. This isn't noise, according to Schiff. It indicates that investor trust is subtly shifting away from speculative assets and toward tangible, genuine value. According to Schiff, the crypto bubble is collapsing similarly to the dot-com boom, but on an even bigger scale. Companies related to Bitcoin and digital assets are down 70%, and many will certainly go bankrupt if Bitcoin falls further. He cautions that selling pressure would intensify significantly if Bitcoin definitively breaks below $100,000 and moves below $50,000. For Schiff, the risk is not only monetary losses, but also the wider effects on the economy. In the United States, cryptocurrency has grown to be a significant employer and investment vehicle. If the bubble breaks, consumer spending will be negatively impacted by the reverse wealth effect. Unemployment would increase and wealth will disappear. However, Schiff also highlights that every market downturn presents a chance. Gold and silver are still close to their all-time highs, while cryptocurrency stocks are falling and digital assets are losing steam. While Bitcoin and cryptocurrency stocks have plummeted, physical precious metals have maintained their value. Thanks for watching. If you like this video, give it a thumbs up, subscribe, and turn on post notifications so you never miss an update.